first, I want to kick things off today with Warren Buffett's annual letter, Aikiko, because we learned a bit more about his thinking for the year, not only how he's feeling about past mistakes, highlighting in his words, overpaying for precision cast parts, but also his new warning about bonds not being the place to be for investors and the potential risks that investors on that side of the trade might be chasing with yields still extremely low.
Yeah, the bond yield story is certainly relevant given just how quickly we saw the yields rise last week. And on that front, no surprise, Warren Buffett saying bonds are not the place to be these days. And let's specifically look at what he said in that annual letter, because a lot of investors looking at this to sort of potentially reposition their portfolios. Warren Buffett saying fixed income investors worldwide face a bleak future. Some insurers, as well as other bond investors, may try to juice the pathetic returns now available by shifting their purchases to obligations backed by shaky borrowers. Risky loans, however, are not the answer to inadequate interest rates. An interesting take there. And when you look at where things are trading today, we have seen the 10-year yield pull back in a significant way after really getting close to that 1.5% level last week. We're looking at 1.43 right now. Another thing that stood out to me was also kind of what he talked about in terms of Berkshire's buybacks. We saw Berkshire buying back a record amount of company shares. Fourth quarter, the company brought back $9 billion of its shares, bringing the total repurchasing of 2020 to $24.7 billion. And Zack, on that front, we've heard Warren Buffett say before that he doesn't necessarily believe in buybacks, but it is something that he sees the need to inject himself, especially when he believes that the intrinsic value of a company is dropping. So maybe some indication of where he sees Berkshire share trading in relation to the broader market right now.
Yeah, and you can see how that historically stacks up compared to quarters of the past there in terms of their share buybacks. But I mean, Aikiko, we talk so much about the recent performance of Berkshire and how it stacks up against the market. But when you really zoom back, I mean, it's tough to knock Warren Buffett for his past performance relative to since the 60s, outperforming the S&P 500 by a 2-to-1 margin when you back up and track it all the way back then. But as of late, I mean, some people have been highlighting some of his misses. Of course, there was the airlines move right before kind of that became a very popular retail trade in betting on the reopening of not just travel, but the broader cyclical kind of stocks that we've been talking about here on this show. So people are focusing in on that, maybe focusing in on the way that Apple is now a very sizable piece of his portfolio, the largest stock holding in terms of common stock. But what do you make of that when you really do zoom back and try and piece together how his maybe investment thesis has changed in some of the companies he's now betting on?
Yeah, interesting context here. I would sort of point our viewers to the morning brief from our editor, Sam Rowe, because he had a pretty good chart here that shows the performance of Berkshire shares in relation to the S&P 500. And when you look at 2019 and 2020 overall, it's certainly underperforming the S&P 500 by a wide margin. Berkshire shares overall, though, looking at a performance since 1965, we have seen Berkshire shares see an average annual return of 20% compared to the S&P 500's 10%. So that's not necessarily to say, to call out Warren Buffett on his investing. He certainly knows way more than I do about investing in the market. But it does point to the fact that if you are sort of long-term in investing here, you are going to have some years where things don't go well. And the point that you pointed out here, precision cast parts. So he has talked specifically about the mistake on that front, $11 billion write down there. He says, I paid too much for the company. No one misled me in any way. I was simply too optimistic about PCC's normalized profit potential. So we all know Warren Buffett to be somebody who, when he knows there's a mistake there, he's the first one to own up to it. And at least on that front, it sounds like he feels like things were going to be much more rosier than they turned out to be.
Yeah, and on those more recent bets there, maybe just worth highlighting because a lot of people have Apple in their portfolio, so maybe not a surprise to really see how that's been a standout in his holdings. But when you think about where it's at, it was $120 billion in terms of the size of that Apple holding at the end of 2020.